Hello everyone, this is Brandon Garrett of Snow Garrett Wealth Management with a special market update in the midst of the COVID-19 pandemic. Stocks recently rallied, working off of historically oversold levels. Although the impact to our economy and American workers has been devastating, we did see some positive developments from monetary and fiscal stimulus, which could set up a powerful eventual economic rebound. We have now seen more signs of a potential major low in equities, and we believe that stocks are a more attractive buy than a sell at these levels. The COVID-19 pandemic continues to significantly impact the global economy. In addition to the tragic human toll, containment measures have further elevated near-term uncertainty for investors. As horrible as things have been, there is light at the end of this dark tunnel. We have been gauging the stock market's potential bottoming process, and we want you to know there have been several steps in the right direction. Markets have already priced in a recession, and various sentiment and technical indicators suggest a limited number of sellers remain. Last week, we gained visibility into how bad this recession could be, along with policy responses that have helped restore investor confidence. Unfortunately, we don't yet have evidence of a peak in new COVID-19 cases in the United States. But models based on the trajectories of other countries suggest this could come within the next few weeks. Although a few weeks ago it appeared we could avoid a recession, the economic data last week unfortunately confirmed a contraction in the U.S. economy. Jobless claims saw a historic spike in the week ending March 21st, which is almost 5 times the previous all-time high set in 1982. This is devastating for many Americans, and unfortunately, this trend will likely continue over the short term. Although the number of new claims is extraordinary, it wasn't entirely unexpected. The United States and countries across the globe have shut down entire segments of their economies in an effort to delay or mitigate the impact of the COVID-19 pandemic. Jobs are likely to return quickly once the economy gets going again, but we know the timing of that is uncertain. Until then, backstops from federal programs and support for businesses to help minimize further layoffs will be essential for millions of Americans. The Purchasing Managers Index, or PMI, fell a record 10.3 points to 39.1 in March, the largest contraction since the data series started in October 2009. Not surprisingly, travel, tourism, and other consumer industries were most impacted. It's important to remember that economic data is backward-looking and slow-moving, while our economic reality has been changing at an unprecedented pace. The roughly $2 trillion Fiscal Plan stimulus package was approved by both the Senate and the House and was signed by President Trump. Some of the highlights of the Fiscal Plan include direct payments of $1,200 per taxpayer and $500 per child. These payments are expected to begin within weeks, helping those impacted by the layoffs. Additionally, the Federal Reserve is setting aside $425 billion to leverage into loans to distressed companies and another $75 billion for some of the hardest hit industries. The historic package also extends unemployment benefits, delays the April 15th tax deadline by 3 months, aids the stressed healthcare system, and helps plug budget gaps for state and local governments. Turning to monetary policy, the Fed has gone all in to provide a backstop to limit the economic fallout. They've dusted off many parts of their 2008 and 2009 financial crisis playbook, but they've also brought out some new crisis-fighting tools in addition to lowering interest rates such as unlimited asset repurchases through quantitative easing. This combination of monetary and fiscal policy is unprecedented. Although it won't help all of the immediate needs of Americans most impacted by this horrible pandemic, it will help cushion the blow for many. But the real benefit may not be seen until the second half of this year, after the virus has most likely been contained and growth comes back. Although we don't have clear sight into a peak in the number of COVID-19 cases, and the market will likely remain volatile until then, we believe stock prices have fallen to levels that are primed for long-term gains based on our assessment of intermediate-term economics and market fundamentals. We will continue to keep you updated on our views on the economy and markets as this challenging situation develops. We pray everyone stays healthy and well.